What is a parabolic move in asset prices, and should you be concerned if you see one? Hi, I'm Doug Ray, president and founder of the Wealth Guardians and the Ray Financial Group.
And I'm Brice Payne, and you've entered The Vault, the Wealth Guardians video series on all things pertaining to retirement planning. In this episode, we're going to talk solely about parabolic moves and what they are and how they impact your portfolios. Don't forget to hit these like and subscribe buttons down below the screen there if you care to catch future episodes of the Vault with Doug, Garrett, and myself. All right, Doug, let's go ahead and talk about this parabolic moves. I'm flummoxed. Enlighten us.
Okay. So a parabolic move can happen to just about any asset class, whether it's a stock or precious metals, cryptocurrencies. And essentially what happens is kind of a buying mania takes over the general public, and they start bidding the price of this asset up and up and up. So let me give you an analogy that might help you understand. I think pretty much everybody watching this video has at least one time been to an air show or seen one on TV, and you've seen the stunt where the stunt pilot gets in typically a biplane with a huge motor on it, takes off, comes back around, comes screaming down the runway at about 50 feet, turns on the smoke canister, then at the end of the runway, pulls hard back on the stick, and the plane goes straight up and up and up and up and up, and the crowd is silent. And the plane just, at some point where you can barely see it, it just hangs there for a second. But then gravity's overtaken lift, and the plane comes back down. The pilot kicks right rudder, left rudder, flips it over, puts the nose down, and comes screaming back down and pulls back on the stick and comes screaming across the runway at about 50 feet again. That is a parabolic move.
Okay.
Parabolic moves, when they happen, they tend to happen fast, go up fast, come down fast, and price ends up back where it took off from.
From the beginning point.
From the beginning.
Okay.
So I want to show you a parabolic move, and on this chart, we're going to use the tulip mania bubble back in the 1630s in Netherlands.
Yes, yes.
Most financial type people have read about in history about this bubble. So the folks back then were trading tulip bulbs, and they got some of these really rare bulbs from the Ottoman Empire. And back in those days, one tulip bulb would typically cost about 15 minutes of a typical worker's wage. Well, by the time this mania was finished, the parabolic price in those tulip bulbs had gone from a 15-minute basic wage to, in our today's dollars, $1 million.
So like 10 to 20 years.
Oh, it took 4 years to do that.
No, but in today's wages, that would be like 10 to 20 years worth of somebody's wages.
Oh, yes, of course.
Yeah.
I mean, it's crazy. Wow. But as soon as the mania was over, as soon as that plane stalled out or that tulip bulb stalled out, it came crashing back down, and people went, what were we thinking?
There wasn't an intrinsic value to those bulbs.
It was not, and people lost a lot of money. All right, next chart I want to show you. This chart is of the NASDAQ during the dot-com bust. I think everybody still remembers the dot-com bust. It went pretty much parabolic from about 1999 up until about 2000, and when it stalled out and came down, we lost 88% of the NASDAQ, and people were going, what was I thinking? Dot-coms, they weren't even profitable then. So a lot of people lost a lot of money. Here's another one I want to show you. This is a chart of oil prices in 2007, and I was actually on the radio then, and I said, this is a parabolic move, and it's not going to end well. Oil went from around, I think, $30, $40 a barrel up to about $170 a barrel, and then it came crashing down, and it went actually below where it took off from. So that was oil prices. So why am I bringing all this up to you? This is why. I'm starting to see some similarities in our market now that are similar to parabolic moves and similar to the dot-com bust. I'm not predicting it, and I'm not going to say it's happening. I'm just saying, let's be cautious here. I want to show you another chart. This is a chart of the S&P 500 that basically starts from the bottom of October of last year. You can see it's almost a straight up move from October of last year. If we look back at the price movement on about November the 13th, you can see the day after November 12th, the market opened up. It's called a gap up opening. In other words, there's a space, you can see it right here on the chart, between the prior day and then the next day. Gaps like that typically get closed. In other words, price typically comes back down to fill that gap somewhere in the future. The question becomes, when will that gap get filled? Will it be tomorrow or years from now? We don't know. But again, this is another reason why I am a bit cautious right now. Here's another one. This is a current chart of the NASDAQ 100. NASDAQ 100 is filled with a lot of tech stocks. Since October, artificial intelligence has been all the rage.
Right.
You know, it's AI this, AI that. Watch my AI software do this. Well, if you look at this chart, it's the same situation as the S&P 500. We had that big move up from the October low, had the same gap up opening. You can see it right here on the chart around November the 13th, and it hasn't been filled yet. Well, again, I'm not saying it's happening or going to happen. I'm just saying let's be cautious. I would rather be cautious than sorry in the future. So this is just a quick little warning here at the end of January, early February, and Brice, we'll just see how things play out.
Now, Doug, we're financial planners who specialize in retirement planning. So I guess the takeaway here might be, if you're getting close to retirement or in retirement and your risk tolerance is not what it used to be, perhaps you want to sit down with a financial planner and make sure that your portfolio is in a proper allocation to sustain a parabolic hit like this if you are indeed exposed to the market.
Absolutely.
All right. Well, that's what we do at the Wealth Guardians. So suggest you get yourself to a financial planner, if not the Wealth Guardians, and make sure that you're prepared for the next parabolic move whenever that might happen. Again, we're the Wealth Guardians. This has been The Vault. Don't forget to hit those like and subscribe buttons down below there. I'm Brice Payne.
I'm Doug Ray.
And this has been The Vault.